Future trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, everybody. Welcome back to another episode of Tech Talk. I am Cody. This is Andy. For reference, it is May 4th, 4:21 Eastern Time, 3:21 Central Time. Andy, you know what day it is.
May the 4th be with you.
Happy Star Wars Day.
Happy Star Wars Day. Who's your favorite Star Wars character?
I've never seen Star Wars a day in my life.
What?
I wish it weren't true, but I've never seen it.
You're still working on, Season 1, Episode 1, the Game of Thrones, right?
Yeah, spoiler, don't ruin it. I'm still starting.
Spoiler alert, Season 1, Episode 1, Game of Thrones.
Still working my way through that one also.
You're still working, you still haven't, what was that Bruce Willis movie where he sees dead people or something like that? Don't ruin it.
Die Hard?
No. Die Hard.
I've never seen Die Hard either.
That
wasn't
Die Hard? Oh my gosh. What was it? The Sixth Sense.
Oh, there you go.
Did you watch that yet?
No. Still, that's after Star Wars.
Got it. After Star Wars. So, all right. I won't ruin any of Star Wars for you. I think I kind of ruined Sixth Sense for you. But so, speaking of stuff.
First one.
What about charts?
How about them charts? Nov Feeders. We did this one last week.
I believe we did.
And if I'm not mistaken, you said we were going to have a pullback to about 230 on the Elliott wave theory, and then it's a rally.
Yes, we did. And I think it's a question of two, like, where do you have a beginning, right? Is this wave one? Did we just kind of more or less complete wave three here, which is always the biggest of the five, right?
Yep.
And now we're seeing a retracement. You would probably want to retrace like a third. I don't have a math right here, but I mean, you typically would see like a retracement of a third. The only thing that makes me a little nervous about that is that this is pretty pronounced. Like this was a lot more of a gradual, kind of like a flag formation almost.
Mm-hmm.
But, either way, you've retraced a good chunk of it. And yeah, I mean, I think you can take a shot at it. But, I think you got to be super careful of what is this low from yesterday and today. So this is 228.35. Guess what today's low was? 228.35. That's the magic number.
Bingo.
Yeah. I mean, I think at the very least, if you're buying it here, you have a pretty clear spot where you're more or less like out, right? The market didn't like that price 2 days in a row and has a lot of ground to make up too. So let me ask you, I mean, are you buying it here? What's the hammer doing?
You know what? First one out of the bucket here. Nov Feeders. It's definitely a buy.
You're buying it.
I'm taking the recommendations of Andy Fallman from last week. If it gets down to 230, you better be buying with both hands.
Go for it.
And so I think that's what you got going on.
I have not bought any myself. So wait a minute. You keep the hammer in a bucket?
No, I don't. I just keep it on the floor. It needs its own little podium, but I don't have one of those built. So just keep it in my hand for now.
Do you sleep with that thing?
Should.
You should. Hammer and stuff in the middle of the night. All right. Yeah. No, but it's kind of, like I said, if you're going to own it here, you've got a pretty clear, a close at 228 or lower, let's say. Yeah. It's bounced off this price a few times, and it's had a retracement that you want to see in terms of like roughly percentage retracement of this third wave. If we were to turn back around and take off, you'd want to be looking for like a target around using that first one. So kind of around here, right? You usually see that fifth wave be an extension or very equidistant to the first one. And if that were the case, that is usually the beginning of the end. Right, the fifth wave is considered an exhaustion move. That's when I think one good indication of that is like a decline of open interest, meaning buyers are liquidating shorts, and you're just seeing liquidation. Period. Right, a decline of open interest means both parties are exiting, buyers and sellers. So that's typically a poor indication of price direction. So yeah, no, I would look for if we do break out from this 235 area, I'd look for the extension up to about around 245. And if you're buying it here, you've got a pretty clear spot where you're wrong, right? This 228.35, we bounced off of it twice, so I'd say close below that price.
I definitely like where your head's at in this one.
We'll put a pin in that one. All right, what's the next one? You got another one here. Your favorite,
Dec Corn. So we said we were going to put a pin in this one, come back to it, and now we've come full circle, coming back around on it.
So we're circling back to Dec Corn here since it's one of your favorite ones.
We're back.
Interesting activity here in Dec Corn, by the way.
Rounded out pretty good in the bottom here, hey?
It's rounding herself out. Need a little wind here. Yeah, no. What I think is interesting about this chart is, so I have the momentum and RSI. This is 12-period momentum, so it looks at the last 12 periods, and then what's today's price with respect to it. So here, it attempted to cross back over into positive territory, meaning the bull's taking control, and then was promptly rejected. Right, so that's a clear failure, and had this big weakness. But now, after yesterday's close, you clearly retraced a good chunk of that. But what I think is really interesting is right down here. I can't zoom in as much, but I'm trying to scroll out and
check that RSI out.
There we go. That's what we're looking at here.
Look at that
Pointer right there.
There you go.
Right there. Right here. I think you know where I'm pointing at. So what this means is that basically RSI measures overbought and oversold. So when you cross into the blue territory, the momentum to the downside is starting to get, I guess one way to put it is it's becoming difficult to, continue at that rate of change, right? And so when you dip below this blue line, it's an indication that the market is oversold.
Mm-hmm.
And the indicator to, let's say you were short, it's kind of like a warning sign,
right?
Right? Hey, the market's starting to, the momentum in the market's starting to become a little too much to maintain. We may want to consider liquidating here. But the signal would be if it crosses into oversold territory and then back out, which is what it did yesterday. So do you see what I'm talking about?
Yep.
So crossed over here, right? So it's a warning sign, but then it crossed back over the blue line yesterday.
Right.
So like I said, if you're short, that's a really good indication that it's maybe time to get out. And then today, what's interesting is even though it broke, it came well off. Well, not well off, but it came off the lows, and it still settled up around this 530 area.
And I think you and I were talking about this yesterday, but that green candle that you have right there from yesterday pretty much engulfed the past 3 days before that's trading activity.
Yeah. No, I mean, this is, like I said, if you were short this chart, you had good reason to do it right here with this momentum cross. And then the RSI was this, what's interesting about some of these indicators, especially what I've noticed with RSI, is that you see a lot of double tops and kind of candles, what you would look for in candle formations within the actual secondary indicator itself, right? So you have this clear M that's taking place in the RSI. So you've got multiple indicators confirming, but now those indicators are starting to kind of turn the other way, right? Yeah. So it's a warning sign for those that are short. And so I guess from that standpoint, is it time to buy it? I think I'd like to see this one turn back over first. So that would be, I guess it's like what we just looked at for feeders. If you want to try to take a shot at, I don't want to say buying the falling knife here, because I don't think that's the case anymore after yesterday. But you've got to at least know that at 520 or lower, that's kind of I'm out at that point. Whereas, I think there's, potential for it to come back and maybe touch, what is this, the 20-day moving average. You start to kind of bump up against some of these moving averages. So I think there's some decent risk reward here for trying to own it. Mm-hmm. Like I said, your target would be around 550, whereas you're wrong at 520. So you're buying it here today's settlement at 528. You're risking 8 ticks to potentially make 20. I think that's a decent risk reward there. I don't know. What do you think?
I agree. I completely agree. I was looking at the RSI earlier when you and I were kind of picking these charts, and that's the one that really stuck out to me. And then, like I said, the candle from yesterday was just kind of a big jump out point, I guess. So you said below 520, the market just does not like that price below there and seems to bounce off pretty rapidly, honestly. Remember yesterday, we were about 10 cents when the market had kind of settled and then reopened, and we went extremely fast to 7 higher. I mean, just within the matter of minutes. So,
well, to me, to your point, 520 is a number the market hasn't liked. And then you made the comment earlier, you retrace a significant amount, not significant, but you retrace 3 days worth of price action in a single day after trying to break into new lows. Right. So that wick down on the bottom, that was a shot earlier in that session to try to get down in the new lows, and it was pretty handily rejected.
Yeah.
So this is, like I said, if you're short, you got to think pretty long and hard about covering, especially after this RSI, dipped into oversold and then came back, and then you completely retraced all those sessions on this one candle, and then tried to break into the body of this preceding one and failed again.
For sure.
So this looks like it could see some consolidation, kind of like these smaller candles, almost like this right here, right there. I think you could probably see something like that followed up with a green candle that looks kind of like this. or one of those.
Okay.
That's what I think is ultimately coming here. So I'd want to be super, super careful, a little ginger about this.
Okay.
I don't know. Are we going to circle back to this one next week?
I mean, I think we have to. Dec Corn is always a crowd pleaser. People love Dec Corn.
Do they?
You know how many messages I've gotten saying thanks for looking at Dec Corn? I appreciate you guys so much.
How many?
Probably 3.
Putting you on the spot. Go.
Probably 3.
How many?
3?
3?
3.
How many? Okay. I only need one hand to count that many, but that's okay.
It's better than none.
Better than, you know what? You really are a glass half full kind of guy. Anyways, last one.
Last one.
We got one more, right?
Yep. Nonfat.
Yeah. We did this one last time, didn't we?
We did.
All right. So we should just call it. Should we just call this episode "Circle Back"?
I think so. I think we nailed it right there.
Let's go. Super interesting here. So check out bases loaded here, by the way, because with Joe Schmidt, wasn't it a record volume in Nonfat this week in the NDPSR?
Yeah.
Sure was. What's interesting too is that this same price area, by the way, what was it? I don't remember how many weeks ago it was. It was 3 or 4, but we just set a record for the amount of volume.
Right.
For Nonfat on a weekly basis, like 44 million pounds. And it was like, my gosh, how are they going to top that?
Right.
How?
And here we are.
Tell you how. Right here. Bam. So I guess my point is that volume is always a really good indication of price action, right? You get price action on no volume. It's a poor indication. So what I think is interesting is that we're just kind of hovering around this area and spot, right? You've had a gigantic break and we've come out of this downtrend, right? And have managed to do it and starting to create this somewhat of a rounding pattern here. While at the same time, like out in the country, record amounts of volume is changing hands.
Right. I know this is on a weekly chart, but check out that on the 6th there. Check out the low, 112.5 next week.
On the 6th. Hang on.
Go to
Which
the right.
6th?
Go to the right there.
This one.
Check out the low.
This is my left, by the way.
Oh. So you got 112.5.
Okay.
The next week, 112.5. The week after,
that's 113.
112.25.
Wait, what are you looking at, by the way?
The lows.
Oh, the lows. I'm sorry. I thought you were looking at the closes.
No, sir.
Okay, so I agree. So low 112.5, 112.5, 112.25. 112 seems to be the magic number. I mean, here at 110, this is another big area of support. So I guess, like, what's interesting about, again, it's the volume that we're starting to see, and you're seeing price really hang in here, despite sellers just continuing to kind of throw the kitchen sink at them, right, in terms of volume.
Mm-hmm.
And so it's twofold in that, if let's say we've got through your low, 112.25. Say we just close one of these, like the next week at 110.
Yep.
You did it on gigantic volume. The sellers managed to chew through that and then continue to push price down. That's a huge bearish signal, right? But I think until that happens, you're going to be super respectful of the fact that, again, you've broken out of this downtrend. You've done it on huge volume out in the country. You're starting to round out. And, we're starting to see too, we looked at some of these indicators earlier, right? So RSI is kind of flirting around with oversold and has now clearly come out of that and is starting to get back into territory we haven't seen in a while, right?
Correct.
And then two, the momentum piece, we looked at this last time, or we looked at this a few weeks ago where it almost crossed zero, but didn't, kind of got its way back. And now if we'll close tomorrow, if we close here, it'll back to be approaching zero. Across from negative to zero to positive, so crossing that threshold, I think it would be a big deal for this market. You would not have seen positive momentum in this market since June of 22. No, April of 22.
Yeah.
So I don't think there was a small cross there. Okay. So I think if you had multiple closes in a row over this zero line, plus all the volume that you're getting the RSI that's kind of pointing it to being oversold. Like I just look at it and say, this is just ripe for the ability to see, a nice, look at that.
About 140?
You take it. Yeah. If a 30% retracement of this takes us to the last 50-week moving average, right?
Yep.
So we're already flirting up against, the quickest run, right? The 20 period one, in this case, 20 weeks, this blue line. Close over that. Again, you start to see the volume pick up off the exchange, futures start to build in a premium. I think it has the ability to just have some sort of a technical rally that may not be founded on, total fundamental information, but we've seen this market do that plenty of times.
Correct.
Right. So Yeah, I think you got to be really mindful of the ability for Nonfat to just go and read. And again, even if we went to 140, you're only, when I say only, but you're retracing a third of this gigantic move that it had. And that, when you think about like what we just looked at for feeders, for example, that's we saw those retracements, the similar retracements on the way up.
Yep.
So yeah, this is what I'd be really mindful of. I think I'd be covering shorts if you are short. I think you got to be buying calls. If you've got upside risk. I think we talked a little bit about it in one of our like producer newsletters too. If you've got like DRP that's in the money for class 4, buying non-fat calls, for example, or just buying class 4 calls in general, right? Non-fat's a 51 or 52% of the class 4 contract. Obviously, it's a big portion,
right?
So I just think there's cause for us to be, again, at the very least, evaluating the risks that you have and looking to potentially cover shorts or do something to that effect.
Absolutely.
So do you think feeders are the hammer's contract of choice?
True. If I were to be a buyer, also I'd be a buyer of feeders that we talked about today, of Dec Corn that we talked about today, and also spot non-fat. It's a trio.
It's just a trio.
This is the first trio we've had.
You're gonna put beef in the freezer. You're gonna, I don't know what you're gonna do with
From
corn.
everything that you just told me.
Grill it.
You sold me on these markets going higher.
Well, you certainly like the left click more than right click. And for those at home that don't understand that, left click is buying, so it pulls up the buy ticket. Right click is selling.
Right.
Although you could be selling puts, I guess.
True. Not often, but true.
Often, but true.
Awesome.
Why would you sell puts when you could buy futures?
Exactly. Just get out there and do it. All right. Well, that's going to do it for another episode of Tech Talk with Andy and myself. We appreciate everybody tuning into this fantastic May the 4th be with you episode. We didn't have anybody ask for any charts this week. These were all handpicked by you and I. And I think a few of these are going to make it on the docket for next week, though.
Well, we'll circle back on them, but yeah, they'll be on the docket. What docket are you talking about, by the way?
Tech Talk. It's a docket. Put it on the docket.
There's a docket now?
I mean, it's a docket. We're going to look at it later. I'll teach you. Anyway, everybody, appreciate you tuning in. Please subscribe. Give us a thumbs up. Hit the like button. Until next week, have a great rest of the week. We'll see you soon.